Hello, everyone. Welcome back to another Funderbeam podcast. We're getting them in thick and fast now after a break due to my extended absence. But one thing we tend to do, we either talk to founders or we talk to angels or we talk to investors. And interesting as that is, we haven't really had anyone on that sort of connects the dots and kind of sits in the middle of all of those in some way, shape or form. So today, I'm really pleased to be joined by Cathy White. First off, hi, Cathy. How's it going?
Good. Thanks, Oli. How are you?
I'm all right, actually. Yeah, I'm doing good. Got some good stuff to look forward to in the next couple of weeks. And this was one I was also looking forward to. Just before I get into the full spiel, do you want to just give people the intro into who you are and what you do? I'm sure the millions of people listening know already, but just in case they don't.
I really hope the millions of people listening do know me already. That would be impressive. So my name's Cathy White. I'm the founder and CEO of CEW Communications. We're an early stage tech-focused PR agency headquartered in London, but we're a fully remote team. We work exclusively with European early stage tech startups and those that support them. So we do a lot of work with VCs, regularly in touch with angel investors. I myself am also an angel investor, and I'm also the host of the EU VC Lowdown podcast, which covers venture capital specifically as it relates to LPs as well. So it's the VC LP side of the ecosystem, which founders don't necessarily witness as much. So kind of a bit of myth busting, I think, going on over there. And yeah, been doing this for 12 years-ish.
That's a long stretch.
Yeah.
Actually, yeah, it was the podcast that I do listen to. It's quite fun and lighthearted compared to many, but I thought it'd be quite fun to flip the switch and see what it was like to be on the other side of the mic for a change. So there's quite a bit to catch up on, but in a nutshell, as a PR agency that works exclusively in early stage, what do you, before we get into the detail, which part of it kind of gets you going the most? Do you like working with the founders and the companies, or do you like working at the LP level or the fund level? What's the part of it that gets Cathy up in the morning?
Yeah, so there's not a really easy answer to this. I enjoy working with VCs. I really like particularly working with VCs that are brand spanking new and they're launching a new fund, because there's a lot of excitement around that. And more often than not, they've got really impressive careers, or they've been successful operators or founders for quite a while now, especially with the continued emerging VCs that are popping up across Europe. So that I find really exciting. And then on the startup side, I do enjoy working with founders, but it's probably a specific type of founder. I like working with all of them.
It's worth saying, though, to people that don't know, that you used to be at Seedcamp and Technation before that. So you've probably done an awful lot with the early stage, right?
Yeah, a lot. So I started my career in other agencies. So 12 years ago now, 13 years ago, I feel old. But when I started out, I worked for a firm that was based in London, but actually the headquarters was in Silicon Valley. So a lot of the companies that we were working with at the time were the kind of the darlings of the London tech scene. So I was working with Index Ventures, TransferWise, when it was literally launched TransferWise back when it was a 6-person team from Estonia, worked with Moo.com. These were the big names that were popping up around very closely Silicon Roundabout, back when the hub of the London tech scene was very much built in that area. So did agencies, then went in-house at Seedcamp, where my role was marketing and PR comms for the fund, but more than 50% of my time was actively working with the portfolio. So that was mentoring or helping them out with announcements. Then I went to Technation. We don't talk about my role at Technation. It was one of the worst experiences of my life, which it's interesting also now seeing everything coming to a close with Technation. And then I for years, I wanted to set up my own firm. I got a taste for running stuff very early on, and I really wanted to take on starting my own company. So that's what I did. But hand on heart, if I had to tally up the number of businesses that I've actively worked with, mentored, invested in, or even connected through by mentoring and kind of running seminars and things for accelerators, I think we're now very comfortably in the thousands. So it's a big range of different types of companies as well.
Yeah, so it's actually quite difficult to extract yourself from that sort of operating mode as well, because I know what this is like too, especially when you hear a nice idea and you meet someone who's starting something cool and they want you to be involved. It's quite difficult to turn down because you've trodden the path so many times before. So that's quite different to working with the LP type funding side of a fund. So what's the biggest difference for you, like how you approach kind of that sort of work from an agency point of view? Because actually, I guess in many ways, doing the agency work for a startup is quite plannable, whereas actually PRing kind of VCs is a little more complicated depending on what their requirements are, right?
Yeah, ultimately with VCs in particular, even more so than if I was working with a group of founders at one startup. With VCs, in the nicest way possible, you do have to balance quite a few different strong individuals and their egos. So whilst they all might come together with ultimately the story that they want to put out there as the fund, they all still will, to a point, have their own agenda. But, because it's competitive, right, in terms of getting the most lucrative deal, etc. And each of them need to talk about topics related to the entire fund, but then they have their areas of specialism as well, and you want to position them as thought leaders. It's back in the day when I started my career and I was junior and we were working with Index Ventures. Index, very, very well established fund, very well respected. It has a lot of very strong characters in it. Sure. And balancing what they all want it's a dance. It's walking a fine line. For funds that are starting out, or they're smaller, or they've been going for a few years and there's maybe only 2 partners or 2 or 3 partners, it's a little bit easier to manage. And much in a similar vein to startups as well, and how their objectives change over time. With VCs, you've got a blend of objectives, because if you've launched a fund, fantastic, you want to build excitement. You might be trying to drive a little bit more attention if you've only done a first close and you're looking to do second, third, and finish the whole thing. And at the same time, you've got to get the message out there so you start getting some really lucrative deal flow coming through. And you want other VCs in the ecosystem as well to be very aware of what you're doing for collaboration. And then as you've exhausted that fund, or you're getting closer to having invested all of it and you're back on the fundraising mode, well, then you've got to be seen by a lot more LPs. But you can't actually go out there with a bell via public relations and be like, hey, we're raising another fund, because that causes a few other problems with the LPs and the raising of the fund. So yeah, so it's a challenge.
Do you therefore, let's just take a sort of a hypothetical scenario, if there was a VC and they're building a fund and they're looking for new LPs or limited partners, do you treat that almost like they are a startup? Do you kind of look at them in the same process as like, well, this is a company, if you like, this is startup with goals, so we treat them in the same sort of way in terms of coverage? Or like, as in, as you say, you're trying to get as much important coverage as possible, but without carpet bombing the world? Yeah. Do you approach them in a similar way, or do you look at it completely differently?
No, honestly, the approach is very similar. It's just that the ultimate audience or the publications that you're using in order to be seen by them will differ. But even in the tech world, right, like a bunch of publications I would go and talk to about a startup, we would also go and talk to about a venture capital fund.
Right.
So the strategy that we put in place, there will be significant overlap with what we would be doing for a startup. It's just that the messages are tailored. So
it is interesting actually, because you look at some publications and by default they cover both sort of things, like a small startup raise in some very obscure sector is reported on the next page. It's like XYZ fund just raised ABC money. And you think that, I suppose we've got used to the fact that they apparently go together.
Yeah. Yeah.
But that's
Well,
kind of a vagary of the VC world, I think, because that doesn't really happen in other industries. That's all.
no, no, it doesn't. It's it's one of the weird things, I guess, just about the startup and tech media in general is, and I've heard this complaint many times over, no matter how many times journalists actually say funding events aren't exciting, they are one of the things that they cover the most. And the funding event, whether it's a fund or it's a startup closing a round, that money is just validation for what you're trying to do. So it makes the argument to a journalist that you're interesting. People have seen what you're doing. They've got excitement. They want to be involved in it. And it's the hook to then tell a much bigger story. So typically with fund announcements, for instance, I actually did one yesterday for a client. So a client of mine yesterday announced a fund which is in collaboration with another VC. So it's Amadeus Capital Partners and my client, which is Apex Ventures. Two of them have created a new 80 million euro early stage fund to invest in deep tech startups. Great. Now, what's really interesting is in the last month, the German government came out and said it was creating a 1 billion euro fund to invest in deep tech and climate tech. France committed to 500 million euros, which they are going to, again, invest into deep tech companies. In Germany, actually, they were focusing on growth stage. So again, you've got another fund coming along that's doing early stages, recognizing that deep tech's really important, and their main area of focus is the DACH region. And so when we're going out with announcements around funds or announcements around funding events for startups, we're actually talking about bigger trends.
Sure.
And bringing it all together. But yeah, it's as much as journalists say funding is not like super exciting, but they do still quite like it. It's everywhere.
No, it's just as you say, it's very particular. Like if you were reading, I don't know, in property, the commercial magazine was always Estates Gazette, right? And you would have big announcements that so and so's, got a 500 million pound real estate investment trust, and they're going to launch and going to be buying a load of property. Now, what you wouldn't have on the opposite side of the page is John sells his house for 500,000.
Yeah.
You know what I mean? It's just not, or, some small landowner sells a parcel of land because they've got an idea to build a farm. Like, it's almost like the announcements of the funding rounds. I totally agree with you. It's validating the ideas. It's PRing the company, what it does, as much as the funding round, right?
Yeah.
But I think it's completely unique to VC, because someone like Sifted will exactly say, on one page we've got a €1 billion fund of funds. On the next page, it's like Tom and Jane have raised 300k to launch their new shoe thing. It's fine, but it's just
to give Sifted credit, and actually it's interesting. So Sifted, TechCrunch less so, a few other publications are adopting this rule, but because now there is so much funding, even with the downturn, right? Like, we're still talking about a lot of funding and therefore a lot of funding announcements, and journalists have got to make a decision about which one is more worthy of being written about. And oh crap, I lost my train of thought here. Come back. Yeah, so sorry, with Sifted, they won't cover an announcement under 2 million.
Right.
Now, sometimes they will, but the company's got to be really, really, really groundbreaking. So they're generally not covering pre-seed now. So if you're a company and you've raised less than 1 million, you could still get some press coverage, but you're not going to attract the big titles, because quite frankly, a lot of people nowadays can raise that. It sounds silly to say that as a statement, I realize, but it's not groundbreaking enough for journalists anymore. Whereas 10 years ago, quite frankly, if you were to say, yeah, we raised 1 million seed, then yeah, TechCrunch would have taken it for Europe, and it was different. So no, the shoe business with 300k, probably not.
What if it's an AI shoe business?
Well, this is the other thing, right? Because then we get into the territory of using the marketing buzzwords, and do they actually match up with the technology that the company has built, or is it just for show? And journalists are very good at filtering out the shit.
Yeah, no, I get it, but it's actually interesting. Like, if sort of joking maybe aside, if I did have an AI shoe business that could immediately identify your shoe size as you walked in, and it revolutionized the way that we did customer service. It is kind of newsworthy. I get it. And the 300K raise, without being flippant about that, is not, the story is not about the money raise. It's about what it's going to enable my AI shoe company to do, right? And I suppose that therefore becomes newsworthy. It's just always made me laugh that you sort of flip the page and then there's like more zeros, and the stories do connect a bit. But on that note, I mean, that we're talking about flipping pages, and this is traditional public relations or comms, whatever you want to call it. Has traditional PR, and let's say broadsheet media and that sort of stuff, has that been a challenge for VC in the past that's now sort of turning a corner? Or, like, you know, some VCs would want the FT, for example, but I guess 10 years ago they may have been a bit like, well, that's not for us. How do you see it?
So VCs in broadsheet media, or even just like national newspapers, it does happen. They do get picked up. If they announce a big, massive fund, then, you know, business sections do tend to take notice. And the FT, one of the more kind of classic ways that we've always tried to get VCs into the FT is, if you raise a €500 million fund, no brainer, you can get FT. They would definitely be interested in it. If it's maybe in the 100 to 200 mil region, then it's a tougher argument. Again, they're a bit selective based on the actual capital itself, or unless you're doing something very, very, very niche, different, etc. But one of the ways that we've always tried to get VCs into these different places is ultimately the money that you're investing is not important. What you're investing in and the trends that you're seeing in markets, that's what's important. So anything on the insight side of things. And, you know, if you're a VC and you explicitly invest in fintech, well, then quite frankly, you are an expert on what is going on when it comes to fintech, whether it's consumer, B2B, etc. And journalists like having VCs that they can call on, whether it's actually you're going to end up in the article or you're just going to give them some useful information that helps paint a story that they're putting together. So it is possible to get coverage in these places. But it's, I would say generally your opinion and your insight is of much more value than, look at us, we've got another 250 million euro fund, etc. Like it, you know, that can be picked up. We did a fund announcement last year for backed VC, and all of the coverage that we got was primarily tech publications and more general kind of business. National media generally not massively interested in the size of the fund and everything at the time, but then we got them on Sky News on the Ian King live show, and it's just an interview. And again, they touch on the fund, but then all of the other questions are more to do with where the money's going. What are you seeing in the market? What's really exciting right now? So everyone wants to always know what the next big thing is, and VCs are in a position to make their bets on what the next big thing is.
Yeah, on that note, and that all makes a lot of sense. In that scenario, and for the uninitiated or whoever's listening who may not be fully familiar with the world of larger VC, who are those type of VCs trying to impress upon with this PR? Is it, you know, once you, especially if you've announced a fund, we noticed the other day, not to make any judgment, but a rather well-known person from the Dragon's Den program here in the UK, who has a big social following, announced,
I think we can say his name.
Stephen announced
Bartlett.
£100 million fund, but actually the announcement, when you read the small print or any of the print, was that, you know, raising that fund, it's not closed, it's not ready to invest. So that we could see was typically PR to people to go, oh, Stephen Christ, you've got a fund, you know. What about the guys and girls that have already raised the money and are announcing their fund? Who are they trying to impress upon? Is it deal flow? Is it LPs for future? Is it just ego? What do you think who's the target?
So I think typically there's two main targets. The first one is deal flow. So it's getting the word out there in the context of the wider community to know that you now have this fund and you're looking to back in all of these sorts of different businesses. And VCs have multiple different ways, right, in which they find companies, but it's worth putting it out there so that you're recognized as being active in that space. And the second one is, more often than not, when funds are announced, they are not closed. They may have done a first closing or a second closing. And so there is an element still of getting in front of LPs to finish the fundraise, right? Now, there was an article that actually David, part of the EU VC team, wrote a couple of months ago. It was published on Sifted, talking about the fact that it's really frustrating when VCs announce that they have a fund and they make it look like they're done fundraising. So they don't disclose the first or the second or whatever closing they're at. They just say, we have a X million pound fund. And for startups, then you start talking to these investors because you've been told the signal is there, we have the fund, come and have a chat. But then you realize actually they don't have all of the capital that they're talking about, right? So there's actually been pushback because of this. So now, particularly the tech publications, so Sifted, TechCrunch, TechEU, they're all now, on Business Insider as well, actually, they're all now getting into the habit of asking, what have you done? Is it first close? Is it second close? How much is it, etc.? And I think there is a responsibility on VCs to not lie. You've got to be honest. So even the fund I announced yesterday for a client, right, they're targeting an 80 million euro fund. They've done a first close. They've got 28 million euros. But there's a bit of a fine line. And this is where I guess what Stephen Bartlett has done is a bit risky, but then he's a celebrity, so maybe he gets special treatment. But technically, you're not meant to go out and advertise the fact that you are raising a fund. I think on this side of the Atlantic, it's a bit grey, but in the States, if you wanted to talk to American LPs, you can get in trouble. And it can have real negative impacts on you, right? So let's just assume Stephen Bartlett is well connected enough and has enough celebrity that he'll probably be fine, but it's not the best strategy.
Well, no, and we, just as a caveat, Funderbeam is a regulated business, so we operate in the regulated space, and we talk to the regulator often about what we can and can't do with regards to funds, and things are getting more, what's the word? The scrutiny is increasing on what people are doing, and the statement, and this is not referring to Stevens at all, by the way, but the statement that anyone to make saying we have a fund, that is the sort of statement that's misleading, and it's not just for the founders, but it's misleading for a number of people, including the existing LPs. What are you offering? You're saying we've got a fund, we're ready to work. At the moment, there's probably no strict regulation about the marketing of those sort of stage funds, but it will come because it's themed under financial service and all the rest of it. So yeah, it's always been something that slightly bugged me too, because like actually in Stephen's case, it's as much of a PR exercise for him to say that he is raising 100 million, or raised, or has £100 million fund to help young entrepreneurs. That's quite a bold message when actually you don't yet.
Yeah.
And I think that's what someone at some point, the regulator may turn around one day and say, you cannot say you've got a fund ready to help people if you don't actually have a fund ready to help. Yeah. So that's interesting. So when you guys are doing the prep work, obviously you're very careful to make sure. So if you're trying to impress on LPs, how often do you think this sort of PR, I mean, not how often, but in the guts of it, is this a successful and proven way of getting more limited partners interested in investing in your fund?
So I think,
or is it still about the handshaking?
Yeah, so I think that the first thing really is to fully understand PR as a channel. So PR sits way up at the top of the marketing funnel. So PR is purely about awareness. But what public relations is there to do is it is there for you to build trust and to be credible. Right? So, if you're having conversations with anyone nowadays, you're going to go on Google, you're going to go and have a little bit of a snoop, you're going to check LinkedIn, and having press articles and positive mentions, obviously, out there is another form of validation. Because if I go looking at a VC fund, or even if the fund doesn't necessarily exist yet, but say it's the person raising the fund, if I go and search for them on Google, and the first page of Google, there's a bunch of articles that come up and they share their expertise, they clearly have a lot of experience in what they're talking about, that does seep into your brain. You do take that into consideration. So the awareness piece is really important. And to a point with PR, sometimes one of your objectives for it might literally be hype.
Yeah.
Right. And I think with LPs, dependent on who they are and whether they're individuals, less so I think if they're really big established LPs. I'm thinking more at an individual level, maybe sometimes family offices. If they see an announcement's gone out and maybe you're already talking to them, there's been back and forth, but there's been no commitment, sometimes just a bit of hype is enough for them to kind of feel a bit of FOMO.
Yeah.
I
get it.
Yeah. So I don't think, you put out a press release about the first close of your fund and suddenly you've got 50 LPs knocking on your door desperate to get in, but you do get a little bit more awareness there that might just tip someone you're already having conversation with over the line, or it might lead to a few people getting in touch. Can you send me more information?
I think that probably rings true for the family offices, especially some of the more traditional countries like Singapore or the Middle East. If they were talking to you and then they suddenly see a flurry of articles in well-respected publications, it will do no harm at all with regards to them making the choice to you as opposed to someone else.
Yeah.
Talking of VC, so this is something that comes up quite often now, and I don't know where your opinion lies on it, so let's find out. Do you believe, or do you suggest, or otherwise, that venture capital firms should spend their own money or time or resources doing PR work for portfolio companies? Some do, but just to caveat this, some do a very good job of a lot of social work for their companies. Others have very completely silent. So it's just interesting to me to see what you think.
My honest opinion is yes. Now, I will be the first to admit I benefit from having that opinion, right? Because otherwise I wouldn't be employed by VCs in some capacity. But ultimately, why would you not want to champion the companies you've put your money into? Right? And even if that championing at a minimum level is you as an individual VC talking about them more regularly on your own social media, it feels like a no-brainer. Why wouldn't you want to be showcasing the sorts of businesses that you're investing into that you want your LPs to be aware of as well?
Do you think some of them ever don't want to do that just in case things don't work out? And they
if they do, I've not met those individuals. I think I'd have a really interesting conversation with one of them. I mean, first of all, if you're not championing it because you're worried that it's not going to work out, why the hell are you in venture capital? The odds, come on. It doesn't make sense. But no, I think there's a responsibility on VCs to help out as much as they can until a certain point, right? If you're a seed stage VC, then Christ, yes, you should be helping your companies out as much as possible. But if that company then has become Series B, yes, increasingly, they're not going to need that level of support, right? They're going to be way more set up and they'll have investors further along in the journey that can provide X, Y, Z. I still think that there is a massive role for VCs to offer platform. I think that is a game changer for startups. So Seedcamp, when I worked there, they were one of the first really to establish the platform support for their portfolio. So I worked for them 8 years ago. So this was around about the time there was a period where suddenly all of the VCs were announcing their new platform value add, blah, blah, blahs. And now I think it's a given, right? There's got to be some form of extra value there for the companies that you're investing in. And as part of Seedcamp's platform, I was part of the platform. I was part of the platform team because I was there to help on the comms and marketing side. And particularly, again, dependent on the sorts of businesses that you're investing into. I can give you an example with a client that I have. So Apex Ventures, they back really deep tech companies. So the founders are all scientists with PhDs. They've got sometimes decades of experience in labs, and they're incredibly technical people. And they don't know a fucking thing about marketing
Sure.
or how to take something really complex and explain it to a point where the more average human being is going to understand it. And speaking purely from a commercial point of view, if you're an investor and you're seeing an opportunity to take something that is deep tech and you want to take it to market, well, you need to help them figure out that piece, because they're not necessarily commercially minded people.
Right.
So I think there's still definite, it's my very long-winded answer, I'm sorry, Oli, but I
No,
think
no.
there's still a big role for this to play.
Well, it's interesting because it's not just a value add. It's, you know, in terms of the deal flow, if you're truly, you know, competing, it's quite, I think I would say, like, for example, someone like Fuel Ventures, who, you know, post to their portfolio company success all over the place. I mean, you can't help but notice it. So, you know, looking at our own Series A, for example, it just came to mind that I should speak to them, because they're loud about their companies and I see them more. And maybe it's not possible for some of the bigger players who've got just massive portfolios to be doing this all the time, or maybe they don't have maybe they've got more analytical staff who aren't comfortable on social, whatever. But I imagine if you're lucky enough to be a founder that everyone wants a piece of you, this would really help weight your decision one way if you knew they were a loud company.
Yeah. And it's, you know, with that platform as well, it's working with the founders, but also, you know, even as you scale and everything, it's working with your team as a startup.
Yeah,
it's kind of quite lucrative, I think, a bit from a hiring point of view as well, if you position it in the right way.
Yeah, I mean, and this has always been the thing about the value add for angel investing as well, right? You know, those angels that are super well connected or are part of loads of different projects or whatever. I mean, you choose that the well connected person, maybe with a lower check over the higher check for someone who's just you know, giving you the money, for example, because of the added benefit. And maybe it's the same for VC. Talking of the tech, because this is something I put in our notes before as well. VC and tech are obviously inextricably linked, and people bet on the tech companies, fast growth, and all the rest of it. Do you see a real difference between PRing and working with the companies that don't have a fully tech lean as opposed to the pure tech company? Because I think sometimes people assume that every VC deal is only tech, when that's not obviously the case. There's product, there's physical stuff, there's retail, and all the rest. Do you approach them differently? Because, you know, one maybe is trying to scale to thousands of users over a course of a day, and maybe one's just trying to get 1 or 2 users because of whatever reason.
Yeah, no, honestly, what we put together as a PR strategy will differ wildly between businesses. And there's multiple different factors at play here, right? So whenever I do a presentation to startups around how to build their own PR strategy, so sort of what you can do to get things going before you bring on an agency or a freelancer or you hire someone, I get every company to start by thinking about ultimately what is the objective here. Because I'm really against doing PR and being seen in a publication just because the logo's sexy and it's something that you should be seen in. It's a nice to have, but that is not a strategy. So you've got to start with what's your end goal. And the business that wants thousands of new users each week and is consumer focused has a wildly different goal and therefore a wildly different audience compared to the company that wants to convert 2 massive contracts a year and is B2B.
Mm-hmm.
So we start with your why, effectively. You know, what the why, the what are you driving towards here? And it's a business goal, and that business goal then gets adapted to become a PR goal. And then from there, we work on your audience. So it's understanding exactly who it is that you're targeting with the messages that you have, and then getting to know the publications that they would normally naturally read, or the social networks that they're most active on, etc. So it's part of that kind of like persona work you do for your customer, it's good to include the media titles or literal media digestion, like how often are you lurking on Twitter and mindlessly scrolling, etc. And from that, we then also work on the messages, because your message is going to differ between a consumer and, I don't know, a doctor and a partner or a VC, etc. That there's always going to be overlap in what you're saying, but it's done slightly differently dependent on who it is. And journalists and media ultimately at the end are the middlemen. So we make the argument to them based on the value of the story, but that value relates to their readers or watchers or listeners. So the strategy, that what we put together, there's tools of the trade that will be very similar, and yes, there's going to be overlaps on titles, but how we go about it is very different.
So that all makes a lot of sense. And you mentioned listening, and this is something that we're obviously recording a podcast or vodcast or whatever they're called. You host a really interesting podcast in our industry. There are a lot of podcasts and a lot of these sorts of things. However, it seems to be one in venture, especially, one of the most useful mediums, because I think people want to hear from people with experience or expertise, maybe more so than any other industry I've been involved in, actually. What do you think it is about the sort of need or want to listen to experts and experienced folks in this industry? Because there definitely is. Like, for example, if I got Jason Calacanis or someone like that on this podcast, not to say that I won't get millions of listens with you, Cathy, but I've guaranteed millions of listens with Jason. Whereas I don't think, for example, if I was a tennis podcast, and okay, maybe Federer and Nadal, but if I had, like, just a well-known professional, it wouldn't rocket me up, because they would expect it from a tennis. But I think in this world, like, it's really focused on expertise and the personalities. Do you find that with your podcast or EUVC podcast? And why do you think we have this sort of fandom thing, worshipping thing?
I don't know. I honestly, I don't think I can even answer this, because VC is such a weird environment. And you do have these sort of gold star famous brand names in venture, as well as the individuals. And I don't know, it's very celebrity-ish in a way, influencery. I don't know, I think maybe part of it is, if you've seen someone who has multiple very good deals and exits under their belt, just the learning of how they think about things and what you can take on would make sense. The other thing in VC, I mean, we were talking about this a bit earlier as well, compared to things like investment banking, who you are as an individual, your personal brand matters so much more in venture capital compared to the brand of the fund that you are part of. The fund, not to say that that's not important, but your personal brand has become really critical in VC. And we touched on this on the EUVC podcast ages ago now, but there are writers in the States that ghostwrite Twitter threads for VCs, and they're being paid $200,000 a year to do this. And again, it's just to drive the number of people following, the importance of this particular individual. And I don't know, it's a wacky environment. The frustrating part of this is because of this kind of celebrity and weird mentality, etc., a lot of people who are starting out now feel very much like they have to do all of these things, because if you're not, you're already behind. Unfortunately, what that means is, I think there's bluntly quite a lot of shit in the market in terms of what people say. There's also a lot of people that don't say anything new at all, and they play it too safe and me too, and they blend into the background.
But there's a lot of advice, as always, which is, you definitely have to ignore. And I think they're mainly referring to LinkedIn and or Twitter, but there's also a lot of stuff like, and people are open about it. Like, I'm starting today my tweet a day, because I've been told if I do a tweet every day, my engagement's going to go up. So you actually know that the person is sitting there racking their brains to start an engagement process.
I think
That's
I know
kind
the
of,
thing I know the thing you're talking about. My personal thing. So that tweet a day thing that started, that was doing the rounds on Twitter from VC, Harry Stebbings started that. Now, what he said, and I've seen VCs that are doing this, and part of me does wonder if they've just been a little bit naive to this. Is, yeah, tweet every day. Come on, challenge yourself. Let's do this. Let's like be accountable. And for us to know that you're being accountable, you're going to tag Harry Stebbings in every single tweet that you do. This is actually a Harry Stebbings marketing activity. This is adding to the fandom of Harry. Not to discount Harry in any way. I mean, this is very clever. But when I saw this happening on Twitter, I was just like, how is no one else getting this?
this is actually, you're spot on. I didn't really think about it in the context of this conversation, but I'm part of a WhatsApp group, and one of the people in there said, I'm going to start this thing. And I remember now he did actually tag Harry Stebbings on the first one. So you're absolutely right. Yeah, it's clever from Stebbings.
Yeah, I mean, it's very clever, but I don't know. It's my cynical brain and being in PR and marketing. I guess I just saw it and I was like, sure, yeah, this is to help other people.
But it is, you're right. There is an element of celebrity. I think your example of investment banking is right, and hedge funds would be right. Like the country's leading hedge fund guru is probably not the sort of person that wants to go on LinkedIn every day and say how wonderful they are. It's just a funny thing, isn't it? And they're just as successful, and probably wildly more successful than many who work in venture. But there is definitely a sort of a justification of what you do as well, maybe. It is very strange. It does lead to some, but what I would say is it does lead to some interesting podcasts, because or videos, or watching stories. Like, so someone like Tim Draper, who is an investor in Funderbeam, but like his stories from his family going back to his dad and his grandfather, like the founders of venture, that's like super interesting.
Well, yeah, but then you've got history there, right?
Yeah.
And
and
that
not,
is interesting.
and not to knock Stebbings, because he's doing really well, but the guy's extremely young, and that's fine. But like, how interesting is that compared to sort of a founding father of venture? For me, it's not as interesting, but I guess maybe for his specific audience, it's very interesting, because it's sort of, it's achievable. And but anyway, on just like the last thing, because we talk for ages, or I do. Talking of the podcast and EUVC and all of these things, that feels very much like the community stuff, right? Be part of the community, join the podcast, join the mailing list, and lots of people doing this and building communities. Do you think that venture, angel investing, early stage, whatever you want to call it, is going to continue down this sort of community route? We hear a lot of words like democratization and microfinancing to allow people in, and various things. Do you think that community is the key to this, or will venture, in your opinion, eventually move to where hedge fund and certain levels of investment banking are, and become an elite financial services activity, which some might argue it should be, bearing in mind the risk involved?
Well, yeah, I mean, yeah, I think I'm very pro the democratization, because I think giving people access to do different things with their money is interesting. And I say that as someone who would like to do those things with their money and is in that position. But you're right, it is high risk. And I think the problem with venture more generally is we shout really loud about the big wins. So I think you can, from an outsider's perspective, unless you actually know much about this model and how it works, you just assume you're going to put a couple of grand into a syndicate, into a fund, into a whatever, and you just leave that for 5-10 years and it's going to come back and you're going to be super duper 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 wealthy, which is not the reality, right? Like it could be, but it's more often than not going to be that case. So there's pluses and negatives to both sides. I also don't think it should become super duper elite. Again, I mean, if we just, part of me is against the wealthy continuously just keep becoming wealthy and this widening of the gap. I think if we can make things more accessible, but we provide the education to people so that they understand it, then I think that's where we should go. And the other thing with the democratization is I just find that way more appealing, not just in terms of the capital and giving people access, but again, it's like with angel investors, you invest. I always joke with the investments I've made. I'm like, yes, I invested in you so that I could do your PR for free. How did we get here? But it's bringing more skills, bringing more understanding, experience, etc., into the companies that ultimately then, you're a part of through being an LP. I think that's just interesting at a human level in terms of collaborating. So yeah, so it's not a fixed answer, Oli, sorry. It's my optimistic, I think it should be like this, but understand that that could also backfire. So let's make sure it's not, by educating everyone properly about how VC works.
Yeah, and this is the bit that we have to answer as Funderbeam on a daily basis, the difference between the sort of casual investor, day-to-day investor, professional investor, fund investor in a fund, a proper limited partner, an angel. And I think that from a regulatory point of view, sorry, that's why this world can be a bit murky, and there's a lot of scrutiny now on the investment offers that companies, that funds, and indeed angel networks put out there, because an investment offer that's unregulated and going to people can end up getting people in a lot of trouble one way or another. And it doesn't make the industry any more glamorous to cover it in regulation.
No.
But as we know from other industries that were unregulated, really bad things can happen. So I think that's the reason I ask, I suppose, is because if we were to take it to the extreme, a lot of sovereign wealth funds and others could dominate venture, like overnight, compared to, say, if they decided not to do property for 1 year and decided to pour all of that into venture funds, they could mop up much deal flow. But is that good? That's the thing. It's not really, is it? Because as you say, it's about moving things around. And likewise, if investment banks didn't have pensions as shareholders, maybe they would take more of a risk with some of their investments and get into this and then blow everyone out the water as well. But I think what you're saying is that the democratization actually is sort of healthy for the ecosystem as a whole.
Yeah, I think so. I with that democratization as well, and the health to the ecosystem, and I'm going to make sweeping judgmental statements here, right? So I don't have facts to necessarily back them up. But if we continue to just have money coming in from that top level you were just talking about, what does that mean for diversity? What does that mean for attracting other sorts of people to businesses as well? So I talk a lot about how terrible diversity is in tech. Sorry, Oli, but it's the white man problem. Yeah, right. And I think if we continue to close more doors or not make other people feel welcome, it's just going to get worse. It was the shocking thing with the Atomico State of European Tech report when it came out at the end of last year. Actually, so there's always the 1% of VC funding goes into women, etc. stat that gets thrown around. I think at one point it was 3%. It's gone way down again. Like we got to figure out how we bring more people into this pool in order for the whole thing to get better.
Look, and you won't find a bigger advocate for that than me. And I think that in a way is why keeping the investor base, whether they are first-time investors, accredited, limited partners, companies that are investing, whatever, to keep that as broad as possible is the important thing. But that means that companies like investment banks and organizations like family offices need to also have decision makers from a different pool as well. And I think that trickles down, and I've seen it firsthand from working with these sorts of organizations, who at the top makes those decisions that then go into investment decisions and all that. And sadly, that's where we need a lot of work as well. Yeah, it's all parts. I'm actually going to an event this evening in Bristol, which is a Future of Angel Investing event, and it's all about female founders and female entrepreneurs. I hope I fit in. I might look a little bit. You don't need to shave. You're fine.
Yeah. Speaking as someone who when I used to live in London, so years ago now, pre-pandemic especially, I used to be a director of an organization called Geek Girl Meetup UK. And the main goal with Geek Girl was about creating more female role models. So we would run events where all of the speakers were women, and the content was never really, oh, for woe is me and I am woman and oh Christ, all of these things are shit. It was actually about putting a really fucking cool woman who's an expert on a topic on stage and her sharing her knowledge with an audience. So again, creating that the mentor people to look up to. And we loved it when guys were there. It was open. It wasn't a we just want women in the room. That goes against the whole thing, because ultimately the more visible you are and you show up and you're an ally, it's great.
Yeah, and that's also the important thing. I think in VC as a whole, I think that, I don't know, I just think we could do better sometimes in endorsing others and their efforts, put it that way. Things that other people are doing, it doesn't take much to endorse, even if it doesn't always fit your agenda or narrative perfectly. Look, this has been super interesting. I expect we could do this all day, because there's still some more topics, but I think we'll have to save it for the next one, because I've kept you for almost an hour. Now, just before we go, just to keep things a bit more lighthearted, I think you are based in Spain. Are you full-time yourself?
See.
And when did you make that move?
So I live in Barcelona, and we moved here officially in September 2019.
And good decision?
Oh, freaking love it here. Like today, it's actually annoying because if I go outside, the weather looks like England. I'm like, that's not the deal. I moved to Spain. Why do you not look like Spain? But no, we love it. It's we're still in a city. It's a gastronomic center. The wine in Spain is amazing, and it's literally just made down the road, and blue skies and sunshine, and yeah, we love it. We literally just bought a house, so I'm temporarily not making angel investments so that I can buy a kitchen and a bathroom, etc. But yeah, we love it. It's a permanent move. One of the reasons we moved actually was because of Brexit.
Yeah.
We moved while we could still be European.
That's interesting. Like, you don't often see a first-hand example of that. So, well, look, I did see about the house buy, so I was going to wish you well with that. That's always exciting, and I expect that the next time I'm in Barcelona, I'll look you up. But we're going to speak beforehand, I'm sure. Thanks very much for taking the time. It's been enlightening, and I hope that some of our listeners have found it useful. If they want to get hold of you or get in touch with you, where can they find you?
Best place, find me on LinkedIn. So Cathy Whites, Cathy with a C, and CEW Communications. And yeah, happy for anyone to get in touch.
Wonderful. Well, thanks again, and we'll catch up with you next time.
Thanks, Oli. Bye.